Welcome back to Alpha Recap. I'm glad you're with us. We closed out a pretty telling trading day, and we'll walk through the winners, the laggards, and what it all might mean. As always, if you have questions, you can reach us at stockalpha.ai.
Thanks for having me. It felt like a quietly constructive session. Not a fireworks show, but a lot happening under the surface.
So, what really stands out here is how the market closed up, but in a selective way.
Exactly. To sum it up quickly, the broad S&P finished up roughly 0.1%, the Nasdaq Heavy Index was up about 0.5%, and small caps led the way, up about 1%. Those are modest gains, but they tell a story.
Hold on. Say that again for folks tuning in. Small caps led?
Yep, small caps outperformed. That suggests a bit of rotation, traders reaching beyond the mega caps for incremental upside, rather than a full-on risk-on rush.
Right. So breadth was improving, but the rally wasn't broad-based.
Yeah, breadth was better than recent days. More names participated, but momentum indicators were only modestly positive, not overheated. So the rally could continue if news is supportive, but it's not screaming all in yet.
Let's dig into why the tape moved. There weren't any shock headline macro prints today, right?
No shockers. The market digested a steady drip of data and Fed commentary, and the overall takeaway was that the Federal Reserve remains data dependent. Traders are pricing a gradual normalization of rate expectations, not an abrupt pivot.
I mean, when you step back and look at this, that kind of environment favors selective stock picking.
Exactly. Analysts pointed to inflation prints, labor market readings, and Fed speak as the things to watch. And comments from some big fixed income players, like Rick Reeder saying he's a bit more relaxed, probably gave traders incremental reassurance.
Right. And the other thing is,
company-specific catalysts kept the day interesting. Earnings beats and misses moved individual stocks a lot more than the macro did.
okay, quick reactions, short takes.
Big move.
Not what anyone expected.
Yeah, that tracks.
Let's run sectors. Materials and mining showed some momentum today.
They did. Materials and mining names had intraday strength. Traders positioning for the next phase of growth and infrastructure spending. That cyclicals bid explains part of the small cap leadership.
And industrials were mixed.
Right. A handful of industrial names rallied on company guidance and contract wins, while others lagged because order trends remain uncertain. So it's stock specific again.
Utilities and energy.
Utilities were bifurcated. Projects around grid upgrades and renewables supported parts of the sector, but rate sensitivity kept other utilities muted. Energy moved with commodity dynamics and production updates, not a broad leader today.
Crypto and communications were quiet, right?
Crypto volumes slipped and regulatory chatter cooled enthusiasm. That lower volume makes any big directional move more fragile. Communications saw isolated M&A headlines and drove selective moves.
Okay, the headline stock moves. Let's get into those. Victoria's Secret did something wild today.
Wild is the word. Shares surged roughly 40% on company-specific news. That was a major outlier, and it drew a lot of attention to retail.
40%. That's not subtle.
Not at all. And then Hewlett-Packard Enterprise jumped about 15% after a blowout earnings report. That's a reminder that earnings beats and margin commentary still move stocks, even when indices only ticked up modestly.
Ulta Beauty popped too, right?
Yep, they beat expectations and gave upbeat commentary. High-quality consumer discretionary franchises can still command attention when top lines and margins surprise to the upside.
Intel remains a conversation point.
It does. Coverage highlighted an extraordinary long-term performance arc, roughly 460% in that broader historical context. And it reinforced the idea that deep value and operational turnarounds can re-rate legacy names.
And there were some interesting moves in specialty names too.
Yes, Core Civic and some specialty REITs stayed in focus after earnings and analyst debate. Again, single stock catalysts mattered more than any one macro driver.
Quick explainer for listeners. What do we mean when we say breadth improved?
Breadth is simply how many stocks are participating in a move. If only a few mega caps go up and the rest are flat or down, breadth is poor. Today, more mid and small cap names contributed, so the rally was wider even if it wasn't overwhelming.
So that matters because a broad rally tends to be more durable.
Exactly. A widening of leadership, small caps joining big tech, suggests the market's confidence is broadening. But it wasn't decisive enough to call it a full regime shift.
Tom, how are treasuries behaving today?
Yields traded with limited direction. That reinforced the view that fixed income markets weren't signaling an imminent regime change that would force equities to reprice. So equities moved on stock level and sector level narratives more than any bond market alarm.
All right, couple quick portfolio notes for listeners. High level, nothing personalized.
Sure, the takeaway is that active stock selection and sector allocation still matter. The tape rewarded firms with demonstrable improvements in earnings momentum, balance sheet repair, or clear business model turnarounds. But the market wasn't loudly signaling a broad shift away from quality and growth.
And just to be clear for everyone listening, this is informational only, not a recommendation to buy, sell, or hold any security, and not personalized advice.
Correct. Analysts' views are market observations, not specific investment guidance.
Looking ahead to the next session, what should traders and watchers keep on their radar?
A few things. Economic prints and Fed commentary could reprice rate expectations if they surprise. The ongoing earnings flow will continue to be a primary driver of single stock performance. And small cap leadership is critical. If small caps keep leading, that's constructive for breadth. If not, rallies will likely be centered in big tech again.
Also, geopolitics and commodity moves can spill over into cyclicals and industrials.
Exactly. Materials and energy volatility can shift sector rotation quickly, so expect a measured session with headline-driven spikes, not a straight line up.
Final quick takeaways, and then we'll wrap.
1. Markets closed up modestly, with small caps leading the day. 2. The macro picture stayed data dependent. Fed commentary and inflation remained the focus. 3. Company-specific catalysts dominated intraday moves. Victoria's Secret, Hewlett-Packard Enterprise, Ulta, and that pattern could continue.
And 4, breadth improved, but the rally wasn't uniform. So active selection and sector decisions still matter.
Yeah, bottom line, constructive but selective. Watch the data and earnings flow for the next leg.
Thanks, Tom. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Appreciate you listening. We'll see you tomorrow after the close with the next Alpha Recap.